Hey, Elon,
Hey,
what's up?
I'm fine. How are you?
What are you doing here?
I'm working for iFOREX, and today we're actually recording the first episode of our new podcast.
This is very exciting.
Yeah, and I actually want to talk to you about social media investors and the impact of social media on stocks.
Everything is social media today.
Everything is social media today. Like I remember, I think it was like 3 years ago when the meme stock, like meme dump began.
Okay.
And I started, like, my friend called me. It was like seriously nervous. I was like, dude, I think the GameStop stock went down. It went up like 200%. And I was like, yeah, I know. I studied like my first undergraduate degrees in economics. And I was like, yeah, that doesn't make sense. That doesn't make sense. I was like, no. So should I invest? Should I invest? No, dude, that's not really, I don't know. Maybe you read it online somewhere, but yeah. And I was like, I was opening investing.com and I was like, holy shit. Holy shit. Do you remember this moment?
And for people who may not have heard, if they have been living under a rock or sleeping on the moon, GameStop was just like a nothing stock that caters to it's a shop, or it's like a franchise for people who buy video games, and they're not really successful. Most of the games now can be downloaded online, so it's like a relic, and they still have the stock. And people who cared for them on a personal level saw that a lot of big investment and hedge funds and investment firms were shorting it. Like whenever the stock goes down, they make money, and they kind of hated it. So they went into this group, which we're going to discuss in a second, and they told everybody, let's play the market, and everybody started, buying. And when people buy, prices go up, and it kept going up. And all these major investment funds who didn't know what hit them lost billions of dollars because their money was, bet on it was a safe bet. And then the people in this group, they reversed the market, and that was it. I think it hit a lot of the traditional investors, even people speaking on finance on the news. They kind of call them like they're opportunists, or they're just trying to destroy traditional investing, and they just missed the whole point. Is that what the value of something is based on how people, stock is just like a paper. But if people think it has value and they want to invest in that value, then the value will go up. So
Just like crypto.
So they kind of gate kept the investment world into just the people who are dealing with it, and that was wrong, because investing is actually for everybody and not just for traditional investment channels, which is something that we do. We provide people the opportunity to trade online, and it's just shattered a lot of beliefs and traditions that were very common up to that point.
I think it was more of a political statement,
Okay.
we are the people. We are the 99%, and we are going to break Wall Street. And the problem with that Wall Street is not against you. Like all of our pension plans and 401ks, we all invested in the stock market. So it's kind of problem if you want to like break Wall Street and all the hedge funds, because, well, it's your pension eventually, right?
Yeah, but the people who made the move on GameStop and attacked Wall Street, they didn't think about that. They thought about profit first, and then to make a wave about how things are handled, and also to show what we call the Wall Street type, the Wall Street investors, the people who are think so highly of themselves that they can be taken down, and look, we took you down.
Yeah.
So it was like more of a Rage Against the Machine kind of a move. But let's go back. So how come? And this is the question that is bugging me for a few years now: is how social media changed and forums changed the people speak about money and investments. Because not too long ago, you wouldn't go to your friend and say, I'm investing in this stock, and you won't share that. It was like a kind of a private thing. Like, you don't talk about your paycheck, which is silly because you should, because then you know how much people are around you making, and maybe you are overpriced or underpriced. And that I see that there's a rise, and especially in forums. I go to Reddit a lot, and people will post their portfolio, a losing portfolio, and say, guys, I lost everything. Here, I started with $50,000. I'm down to $12. Like, and then, either people will say, here are your mistakes, or you should have done that, or we're sorry for you. But, a few years ago, people wouldn't say, oh, I lost $50,000 in the stock market, which is, is the equivalent of saying I went to the casino and lost $50,000. Yeah. But over here, people are just like oversharing everything that they're doing, and mostly when they're losing. And so it's not such a private matter anymore. You need a community to share, even if you had it's like a bad game. If I lost in Call of Duty and I show myself, my avatar dead in the game, people will say, oh, that's what happened to you. You should have hidden behind that wall. Now they're doing the same, but with $50,000 of investments. So that is really, it's a change of pace or the way we think about money.
Even if you see our creatives, like if we think about 2012, I think the creative more was like make money quick or try to trade like before regulations and all of that. And now we're talking about education. We're talking about try to learn. And you can see it like in the meme dump, social media. Before TikTok, everybody was like, you want to make money? You want to trade? Yeah. I'm this Wall Street bad guy and I can make a lot of fucking money. Yeah. But now you can see like normal people. And they always say like, you can invest with $100 and you can try to, leverage it. But if we go back a little bit, I think that the tactics, if we're going back to GameStop, and they use the tactic called short squeeze. Okay. And most of the people doesn't know what short squeeze means. Can you care to explain, please?
Well, it's if you go into the idea of that you can buy something, and if the value of that something goes up, you can sell it later in a higher price, and then you made a profit. Everybody understands that. That's why you buy art. That's why you buy a house. You hope that the price will go up, and then you can sell it and make a profit that has used the factor of time to grow. Now, in the market where you short, you could think that you believe a certain asset or instrument or financial instrument will drop in value in the next, in the near future or in the long run, and then you invest in the inverse direction. How's that possible? How can you bet against something that isn't yours? Like, you're selling something. You're saying, I am here to make money or profit from something going down because I think, based on some analysis I did, that's what's going to happen. And the broker, like iFOREX, gives you the opportunity to say, like, we'll open a position for you or a deal for you, and if it goes down, if the price of the asset goes down the same way it can go up, then the relative change between the number where it started, the price where it started, and the price where it ended when you close the deal is your profit. So you have to have somebody to facilitate that opportunity for you, because you can't just go into a store and say, I want you to give me money to not buy one of your items. That will be cool. Silly. No. Wow, if that can be interesting. Yeah, let's start.
Let's talk to Jeff Bezos and see what he thinks about the new Amazon stores. Yes. So,
we're not going to buy from you, and they can make money. So that is a concept that is maybe hard to understand if you're just getting into trading, but it's very common. And the biggest story in history about shorting is from investor George Soros, who recently gave all his business away. And find a hair, but he believed that something was wrong in the UK financial systems and the way they handle the pound. So what he did was short the pound in billions of dollars. And when the market corrected itself, he found himself,
George Soros is like the investor we talk about, the Wall Street guy.
Yeah,
he is like an old white guy with a lot of money, and that's not the typical trader we have today.
But the action is the same.
The action
He
is the same.
shorted something.
He shorted something, and I think the social media is giving everybody an opportunity to learn, like you're saying in Reddit, but it's also giving people a lot of bad advice about trading. Obviously, like we talk about the FinTok, the TikTok trend about financial TikTok, and actually someone took his life because of bad investment he made from advice from TikTok.
Wow.
On Robinhood.
Yeah.
So,
but that bad advice is there everywhere. You know, you can go to the horse races, and then somebody whispers in your ear, you know, but I think that Lightning Lady is going to win in the 6th race, and then you put your money on it and you lose. And or you can go to a casino and get someone's bad advice and then lose money. Or, you know, you can buy the wrong property or try the wrong food. Bad advice is in everything. And when it is matched with the greed factor, or people wanting to make money fast factor, then you are more susceptible to not see the red flags and take any advice by somebody who pretends to be professional or pretends to know what they're talking about, when you have no credibility whatsoever, but you will follow their advice because something in you tells you, I need to change the situation where I am now, and here's a good opportunity. If I am going to miss this opportunity and this goes big, then I will hate myself forever, which is in a way a better solution than losing all your money.
Obviously.
Yeah. So, but also being an opportunist and finding something that happens right now is always has to be backed up with more information by just one person giving you advice. And this goes to every listener and every person that is ever going to make a big decision with money. Check, you know, references, cross-examine whatever is being told to you, and not go with just one thing. Even if it's somebody who is close to you, he may be wrong. He doesn't want you to lose money, but he may not have all the information, and you trust him on a different basis, and then you take his word and you follow it without checking. That is my
You have
point.
like a golden rule for it? How to avoid the misleading information on social media?
I tried. I mean, with even it can be even with hotel bookings, right? You go, you see 2 people liked it, the third person said it was the worst hotel you ever been in. Then you have 66% of reviews being correct, but you keep reading. So if something doesn't, if 100% of, I like baking, and I go to a recipe and it has 490 people ranked at 5 stars. 5 stars, not even 4.5. So something tells me a lot of people not only use this recipe, but took the time to come back into that webpage, and mark the recipe as 5 stars. So it has some sort of credibility, and that is the way I handle that specific channel. But it's also not a big loss if I make a cake and it backfires and it's the worst cake I've ever made. It's just a cake. So I lost a few dollars on ingredients, and maybe I won't have dessert to dinner. But if you're making a big decision, usually with a large sum of money, then you should cross-reference news and any tools that are available to you. You know, we are not going to list all the tools that we have in the iFOREX platform right now, but you can see analysis, you can see signals, you can see charts, you can see what the community is trading, you can see how other traders are performing and what deals they open. So you have a lot of information that you have to aggregate, and people don't want to do the legwork, right? So if some will say, I checked everything and you should put your money on this, then most likely he did either he has an agenda, or he's correct. But are you going to risk your money on him doing the research for you? That's what we're saying. We're saying it a lot when we advertise, and when we want people to come and enjoy our services, is we give you the tools to make more informed decisions. That is our thing, and we want you to be in the know. It's not us telling you. We will never tell you what to trade. It's you who are going to tell you what to trade based on a lot of information channels that we provide you with.
Yeah, and the problem, I think, like we have the tools. We have the tools to give people like to make better informed decisions about their trading portfolio. But when we talk about things like Dogecoin, Shiba Inu, and even Bitcoin, like Bitcoin or shitcoin, but even Bitcoin, but it's hard to predict and understand because, as you said when we first started this episode, you said that the value of an asset is if people want it, if the people give the value to the asset. So the main problem is to understand with this volatile asset if they go up, if they go down, and mostly the key is to look through social media and not actually the more informed and like business-wise like advisors from people. Just yeah. So we need to understand like the social community in order to trade Bitcoin or crypto first.
Yes, social community is also the downside because people act and perform in a herd. And hundreds of years of stock market activity has shown us that, because when people think that the banks are going to collapse, they're all going to the banks to take their money. And what happens? The banks collapse. Or when the Bitcoin had a craze a few years ago, we saw how, twice or sometimes 3 times daily, we had to update things on our platform because a lot of people were just investing into something that went up and up and up and up consistently for a month. And this doesn't happen with regular instruments. One day it's up, 2 days it's up, the third day you see some decline, and then the fluctuation in the market is what people can sometimes even trust, that volatility. But when you had an asset like Bitcoin that really took over the world for like a month, then you saw and you felt that a lot of people are talking about it, thinking it's people who had never discussed investments with you, which saying we started talking about Bitcoin. People who didn't know what Bitcoin was a week before was putting money into Bitcoin, and the world was moving in a group. And once that group decided that it's not good for them anymore, it stopped and the price declined. It's not what it was.
50%.
Yeah. So you have to either be fast on the trend and understand, okay, this is going somewhere I need to be a part of, or have a more conservative way of investing and saying, okay, when these trends happen, I need to look elsewhere for my opportunity because this can either blow up beyond proportions, or I'm not going to be able to leave or close my deals before the trend ends or reverses even, and then losing more money than I decided to risk. And coming around, it's always about the risk.
It's hard when you told us that people that doesn't even know about investments and finance told you, have you heard about, I don't know, Dogecoin, Facebook Libra, like most of the failed projects. But like I used to fight, like MMA fights. And a lot of people in the recent years were coming to me, do you know about Conor McGregor? And of course I know Conor McGregor. Do you? It's the same thing about crypto. Like every other day, another guy would come and say, have you heard about this new coin Logan Paul just launched? And I was like, I don't know. It seems like a pump and dump, Yeah. Pump and dump. Care to explain, please?
I think I'm very familiar with it, with the concept, but I would say that people are attracted, or they give attention to 2 things: either success stories, like you mentioned Conor McGregor, and he's a champion and he won a lot of high-profile fights in a very short amount of time, but they don't know the story. Like, does he train 16 hours a day? Did he live in the gutter? Did he have not food on the table when he was a kid? And that's what, he had to go through years of training and losing and understanding and honing his skill before he got to where he is. And that brings me to the second thing that grabs people's attention is shortcuts. We don't like hard work. We want things to happen fast. And if you see something, Bitcoin is like a gold mine. You put your money in today and tomorrow it's doubled. And people don't want to either, burst the bubble of saying, okay, this is something amazing I need to get into. or understand that even the people who are invest in Bitcoin have other investments. So it balances out their entire portfolio, and they just like, they don't just go, oh, I had zero investment channels yesterday. I had no idea what I'm doing or any interest in investing. And today all of my savings are in Bitcoin.
Yeah.
So, and that's what the people who take advantage of the market want. They want a lot of people who don't know what they're doing, putting money into something, inflating the price. And then when they decide that it's, time to end the party, they pull out and then they take the money out, but the price starts declining and your money, because you don't really know what's happening because you're not an investor.
It's a rug pull.
Yeah.
It's a rug pull.
And you're left with nothing.
Have you heard about CryptoZoo?
No, I have not.
That's a crazy project, and it's so silly. It's like a game where you buy an egg and it's hatched, and when it's hatched, you get like a certain amount of, I think it's, I don't know which crypto coin do you get, but you kind of like nurture the egg, and then it hatches and you get like a crypto, and you get also an NFT of a crazy NFL, like a dolphin rhino.
Okay.
Yeah, and Logan Paul actually launched it, and people didn't get their cryptos.
Oh, okay.
So it was kind of, I don't like using the word scam. I don't like it.
Why not?
Because we are we're a big company.
Okay.
We are professional. We're not gonna shame people, but it's a scam. But it's certainly a scam. And people, actually, it was so pumped up through the social media. And I remember everything in Twitter, like, did you buy an egg on CryptoZoo? And I was like, no, I'm not gonna invest my money on some digital egg. Okay, that's gonna, I don't know, like a golden egg that can give me money or crypto, because it doesn't sound real.
Yeah, but then they come after you and say, oh, you're a traditional investor. You don't know how the future works. This is where it's going.
Look at me. Do I look like a traditional investor? Like, I work in a finance company, yeah, but do I look like I wear a Tupac shirt?
Yeah. And that plays exactly what I said. People don't want you to burst their bubble. It's like it's a success story because Logan Paul was successful for other reasons. And also it's a shortcut. Yeah. So and he also gamified the option of investing in something and then you grow. It's like a Tamagotchi, but it's not. I don't think it started as a scam. Maybe he was frightened or couldn't handle the traffic of a lot of people just like going into this craze, and then he couldn't deliver on the promise.
Money. Yeah, it's hard. It's always the problem with liquidity.
Yes.
Always. What do you think about NFT?
What my thoughts are NFT?
Yeah, why not?
Another phase, I would say. Things are moving fast. It's not technology. Think about how many iPhones we had over the last 15, 16, 20 years. Yeah. Not 20 years, less than 20. But it's things are moving fast, and we follow these trends as they happen. And a lot of people made money from NFT, and it kind of like the promise was you can give power to the artist. They sell something and you can actually get money directly from clients or people who value your art, and then it gives you sort of ownership and direct access to get paid for your creativity, which is great. But it also was a lot of weird for a lot of people because since it's digital, let's say I drew something and I upload it online and it has only one copy, digital copy. But you can, you can screenshot it. You can download the image if you want. You can copy it and use it in your presentation.
But I can also buy a fake Jordan shoe, like Jordan 1 shoe, and I can buy it for $20, but I can buy the real one for $300.
Yeah.
But you want to have the real one, right?
If you want to have if you want to have the real one, then you will pay more, like a collector. And these people haven't changed for thousands of years. When you have something that is worth value and you want to put it on the wall in your home, that's great. Or say, okay, I own a Picasso, that's great. But it has a sentimental value of a collector, a person with a hobby or an interest in certain something. But you are asking me to comment about NFTs as an investment channel.
Yeah.
And it was as it was hot for a while, and now it's still there. The concept of something having its own identity and having just one copy will help us on the long run with a lot of things as the world goes digitized more and more, because even in the music industry now, they're saying that, streaming is going down.
Really?
Yes. It's still the main place where, because people don't buy music anymore, they rent it, and when they rent it, the artist doesn't get anything. When you used to sell albums, then you would see some money out of it. Even if you get $1 out of $10 album, you still got money, and if you sold more, then you will get paid more. But now you upload your money to a streaming platform, and that's it. Like Snoop Dogg, who is in the business for 35 years, has recently posted that how does someone with 1 billion streams doesn't have $1 million income? Like 1 billion people listen to your song, and you see dimes out of it, a few dollars. Even that not. And if you are a starting artist and the people who run the streaming services, they know that. They know you want to get heard, and you will upload your money for free. So a lot of people listen to your music, but you see nothing from it. So it has to change. Yes, you can go to a live show, you can sell merchandise, but you still don't have the old school music sales in the way and the way people think about purchasing and acquiring music or getting to listen to music. So that's another change. I mean, we veered off, we digressed from finance, but it's also a way that the digital world is changing a lot of the way we think about things that were very simple and understandable yesterday.
It's very similar to finance. Like,
okay,
when we talk about how the world is changing and we move from getting in income from, I don't know, record sales, and to get income from streaming, and it's less, but you need to be like a successful artist, you need to put your personality first today in social media.
Yeah.
And you need to be like crypto. So the crypto, nobody knows how crypto, like we know because we work in this field, like how blockchain work and all those other ideas. But most of the investors small investors doesn't really know how crypto works, but it's the personality of the coin that gave him his value. Yeah.
And when Elon Musk had the whole Dogecoin affair, then people were attracted to his name and his success, maybe from other endeavors, and they said, okay, if he's behind that, or a Tesla, purchasing a lot of Bitcoin, then I can trust the name, the brand that is Elon Musk when I put my money in Bitcoin or Dogecoin. And that changes. The person can decide that, tomorrow I'm not going to support that item anymore, and then your money is gone. And that's exactly, I'm actually speaking not like a traditional investor, but like the traditional institutions. They're trying to block crypto and decentralized finance because it's saying, okay, the money doesn't, it doesn't has anything to do with any economy. The US dollar has, you analyze the GDP of the American industry, and then you can tell how much the dollar will go up or down, up a few cents. But this is just like something that is, free value and can, skyrocket or free fall in a second. And there's no control of the government of the United States can back up the dollar and do a lot of financial steps and policies to protect the value of their coin, because that's what gives their country political and economical strength and influence. But the Bitcoin doesn't belong to anyone that we know, and it can disappear tomorrow with trillions of dollars, and nobody will be accounted for because there's no face. But that's the way they want you to think. Maybe that's the right way. Maybe that's how finance should work and not be controlled by government.
I don't know.
But that's a different discussion.
It's a different discussion. But back to our topic, you talked about Elon Musk. And I kind of need to talk about it.
Really?
Like the Musk versus stock
Must
fight.
we talk about Musk?
Yeah, because if like Mark Zuckerberg, and he's a legit jiu-jitsu practitioner, if he will choke out Elon Musk, what will happen to the crypto community and therefore the crypto prices?
Yeah, if these guys actually get into fighting, I think a lot of people are going to make money from a lot of things, and again lose a lot of money from a lot of things based on what side they bet on. Again, this is boxing bets, casino bets, horse racing bets, And investment bets, it's you saying, I believe something will happen. Every time you put money on something, you believe the roulette is going to stop on number 31. And if it doesn't, and there's chance that it won't, then you will lose money, but you are willing to take that risk. So again, I'm bringing it back to risk. If you want to put all your money in crypto or an index or a stock or a person or a crypto egg, then you have to know, even if you don't like to think about it, that everything you put in that investment can go down to zero. Like you can lose everything in that investment. And if you're okay with that, then even if you lose, you will not crash, mentally or psychologically, because you said, oh, I'm risking this. When I was in Vegas years ago, I used to say, I'm coming in with a $200 that I'm going to lose for the enjoyment purpose, right? I'm going to play everything that I can. And I know I'm not, a professional gambler. This is just for the fun, to enjoy the lights, the music, the people, the adventure. It's like buying a ticket to a show, but that show is a casino, and the casino is going to take all the money I came with. People who go in and say, "Oh, I'm going to, work the blackjack tables and come up with a profit," they're either very, very professional or very, very silly, because you can't win all the time when you come into a casino. But it's the promise of quick cash.
Yeah.
That I'm going to spend an hour in the casino and then I have enough money to pay rent for the rest of the year. No, because the money that you put in will probably go to the casino, and then you're going to find yourself on the street. So risk management is the basis for everything. Yeah. And if you can, and I'm saying it, in a podcast from a financial broker company, if you can't invest, whatever minimum is required to open a deal or to set up an account, don't do it. Don't do it, because you're going to be disappointed by any emotion that's going to trigger once you lose even some of that money, because you're coming in with the idea that somebody is going to give you free money, and that doesn't happen. You need to work, you need to understand the risks, and then wait to see actual things happen, and have these little victories and build on that, and even the mistakes, and learn from them. And if you decided that's the way you want to go, and you put money that you lost, then you then need to rethink and say, okay, I've learned something from this loss. Next time I'm going to put another set of money, because I believe in investing and I want to advance financially, or try something that is new to me, and maybe learn another option to make money. Then again, you have to go through that same process of risking and understanding and learning and trying, and then eventually there's a chance you will see success, like in everything. Like if I go head to head with Conor McGregor now, the fight is going to last 2 seconds, and maybe because the first second is going to wave to the audience before he knocks me down. So, but if I train for the next 10 years, I have a shot, mainly because he'll be older. But
yeah. One of the big problems we see on social media is, if we talk about casinos, like the house always wins. Everybody knows it. But in the stock market, no. If the stock goes up and you win, and you get profit, everybody wins. Like even the stock market, because they get their fees, and the brokers, they get their fees, and the people, the investors.
So why do prices go down if everybody like to see them go up?
Oh, there's a lot of things to say about that, but we won't get into it this episode. Yeah.
But to keep it short, I'd say sometimes, market conditions, even if a lot of people want something to go up, they will make something go down. It can be, something unforeseeable as unforeseen as the weather, or a product not performing well, or people just not liking your new product or your new service. Bad business decisions. There are a lot of things, wars, conflicts, the decline of good soil to raise wheat, and then prices go up because there's just a lot of rain in parts of the world where they grow wheat. And getting into reasons, which are the things that we either teach you or educate you in our education materials when you sign up. but you have to be aware of. Because if you hear about an earthquake in the middle of Africa, and it's very far from where you are, and you may be sad for people who lost their homes, but it has financial repercussions that you have to understand.
Of course.
Because if that country was holding 80% of the silver mines in the world, then the price of silver is going to skyrocket over the next few months until that country can restore its silver mining industry. So every news bit that you get has some, financial opportunity or effect on the money you either have or going to invest in the near future. Even if you have something invested and can be affected and by a factor that you didn't think about when you put the money down.
Yeah, it's funny when you talked about Africa as an example, because a lot of the investors, the small investors, look after only the US market. Actually, we give people the opportunity to trade in Indian markets and some emerging markets. And Africa, actually, like 3 years ago, I made a research for this company. I work as a freelancer. And this research was, could we, I won't say because it's a big company, I want to say the name, but could we put like phone lines in Africa, in certain parts of Africa, and can we make profit out of it? And a lot of companies and traditional investors try to go away from emerging markets like Africa, but there's a lot of opportunity, financial opportunity in those areas.
Yeah.
And that's a part of the problem we see, like in Wall Street bets, and Reddit and Facebook. Everybody talks about the same thing, and everybody trying to invest in the same thing, but they're not actually thinking about the best way to invest their money.
Which is
explore, research, and it's not always the thing that has the most hype. It's the thing that can have the best financial opportunity. Like phone lines in Africa. Like, I don't know if people like think about like in Ethiopia, they want to make all the energy, the electricity, work on natural resources. Okay, did any of our traders started investing in Ethiopian stocks? No, that's a problem, and it's a big opportunity. Not a financial advice.
Indeed, not a financial advice, but you have to look into opportunities that you weren't thinking about. And if you even go to the most traded items in our platform and a lot of other platforms are the big items, the things that move the most and are on the news the most, because that's where we think we can predict something. If there's a quarterly report coming out by Facebook or Meta, then you can say, okay, if they were profitable this quarter, then the stock price is going to go up, and I'm going to invest in that. But if they didn't do that well, or predictions are higher than what actually was the bottom line for that quarter, then people are scared and they're selling their stock. So I can either short or sell before the report comes out. You have to be on your toes and understand, but also not have it take control of your life. If you have a deal or maybe try investing in something, you have to diverse, but not maybe have a lot of interest or finance channels and investment channels open at the same times, because you can be hit from a lot of different directions. You have to know that what you have your money invested in, you also control the information coming out about it and the news about it, and even something second tier news about it, because when COVID hits, a lot of airline and hospitality stocks declined because people weren't allowed to travel or to leave their home even. And now that people are up and about and traveling again, then the airline companies are overbooked and they are in delays. And once they obviously they have a lot of business now because people can travel again, but they're doing a lot of mistakes and they're overbooking, so people like them less, so they try to find other solutions. And when people think about other solution, they put less money into your business, so the price can go down again. It's a never ending. It's story. Always a seesaw, and you have to be updated.
Yeah.
Yes, and I'm I'm not saying it's free advertising, because this isn't advertising for our own company, but we give you a lot of these channels to follow. And
Yeah, but do we sell crypto eggs? Because I really want one.
we don't sell anything. You can't buy a single thing on our platform. You can invest your money in things, not crypto eggs, but you can invest. You are an independent investor. We will not tell you what to trade. We will give you a lot of information and a lot of education, and you can grow as an investor and grow as a trader. And even just for information, go in, enjoy the tools. Most of them are free and open to a lot of traders. You just have to try. And there's a demo account that we give people who want to try, and you can sign up today. You can ask a friend if he's heard about us, research about us a little bit. But you should either come back to this podcast and listen to another half hour of us discussing the market and what can be done about it, or you can go and try. Go to iFOREX.com now, or wherever region that you are in, and then sign up and see all the amazing things that you get for no cost at all, but it's information and it's good for you. And once you think you're ready, you can talk to us, or you can just start in small amounts, or even just try it first with the demo account. We give you actually a big sum for you to try the market.
I think like $20,000.
No, I think it's a little less. It depends on the
market.
Depends on the market. But it's still a lot of money for you to just try it risk-free, and there's no reason not to, especially if there's no risk in it. Then later on, if you decide, and as I said many times during this episode, and you understand the risk, you should make a move. And if you believe in something, then maybe you will see results, because that's how we grow.
Thank you. Thank you, Amir.
Thank you, Elon. I think it was great.
Thank you.
See you next time.
See you next time.